Hello, welcome everybody to the Crypto Mining Show, your one-stop shop for cryptocurrency news from the perspective of a cryptocurrency miner. I go by Blind Run on the internet and Matthew in real life, and today we're going to be talking, well, of course, about cryptocurrency. One of the things I do want to approach today is going to be some of the red flags surrounding the new project called Cedra, and why I'm not a big fan of basically a ton of forks in general, and kind of the ploys that they utilize to prop up their cryptocurrency and basically make it look like it's worth more than maybe it actually should be, and some things to watch out for surrounding that type of thing. Other things we're going to talk about is the Texas Blockchain Council, along with Riot Platform suing the Department of Energy over the emergency survey that we talked about on the last episode. That has now been put on pause thanks to this particular suit. We're also going to be talking about AI-linked crypto tokens surging after NVIDIA sees a tipping point. Now, this is also for you GPU mining fanatics going to be probably problematic surrounding the price of GPUs in general, and so be prepared for that. We'll also talk a little bit about, kind of prepping for the AI movement surrounding cryptocurrency mining as it pertains to GPUs, because it is kind of changing that scheme of, well, maybe it might not be as profitable to mine cryptocurrencies with GPUs. Maybe it's better to move on over to AI, but there is a bunch of extended overhead, of course, if you do decide to consider that. This does mean that also we are seeing just a huge saturation surrounding both the AI and the crypto scene. And it can be very, very tricky navigating who's actually doing something with AI that's meaningful and who's not. This is very apparent across the board, right? We're seeing cryptocurrencies come out left and right getting tagged with AI, and that makes it very hard to navigate the space. I mean, this isn't any different than previous bull runs, right? Like, let's talk about the previous bull run and NFTs, right? That was a big issue, and it was very difficult to see, which ones were going to take off and which ones weren't. And to a lot of people's frustrations, and to my frustration, frankly, just because something is going up in price doesn't mean that they're actually doing jack. You know what I mean? And that is, one of those frustrating things I think surrounding cryptocurrency in general is that, we have this meme culture where a lot of things that really have no purpose end up going skyrocket, and basically the idiots are running the industry. And that does seem to be more and more common surrounding cryptocurrency, in my humble opinion. We just have a bunch of idiots running the industry, and we aren't seeing a lot of good innovation across the board. And that can be quite frustrating, I think, for a lot of people when we're looking at it. I'm very conservative when I'm making my picks surrounding cryptocurrency, and I have very specific things that I put into place. And that means that I do miss out on profitability on some of these projects where when I look at them, they don't meet my criteria and I skip over them. But, Joe Schmo with $10 million dumps it into Dogecoin 2.0 AI NFT magnificent.io, and all of a sudden that coin goes to freaking 1,000%. People are like, oh, I'm so smart for buying it. No, you're not. You're an idiot for buying it. And the only reason it went up is because more people bought it. And frankly, that's a majority of the crypto space is, the price went up because more idiots bought it than they bought something else. And that's frustrating to no end for me. I'm just going to be frank. Maybe I'm a little tired and grumpy today, and you guys get the grumpy son of a tech today. It's just the way it's going to be, okay? We're also going to be talking about the new ASIC from Bitmain. Of course, the KS5 getting announced. I'm sure you guys have already heard about this from every single cryptocurrency content creator currently available. It's an ASIC. It now has more than one option for mining. Obviously, like bringing up the problem of, well, maybe ASICs aren't the solution to having steady hash rate and steady security on your network. As much as the Caspa dev team would like to tell you that it does compared to GPUs, obviously what we saw was that was proven false with the launch of Cedra. So ASICs still have the same damn problem. You aren't going to convince me any other way. You can tell me that other people are smarter than me, but I know when I'm making the right assumption here. And I told you guys this would be a problem in the future, and alas it is. So you know what? It is. It's just the way it is. If something's more profitable, then people are going to move their hash rate over to it. It doesn't matter if it's GPU, FPGA, CPUs, ASICs. It doesn't matter. Every single project has that same potential for that problem. The only way to really kind of solve all of this at the end of the day is to try to make something that is, more and more decentralized, that dissuades people from concentrated hash rate. And that's a problem that I think, is going to take a while to get solved. I don't think that anybody has the answer for it. It doesn't mean that like any individual project is bad. It just means that the actual root cause of the issue isn't something that we found a solution for yet. So to say that you have a solution for something that clearly we do not have a solution for is just frustrating to no end. We're also going to be talking about the Meow launch as far as their new ASIC resistance. That is coming up in about 22 days. I do have an interview scheduled, but I just found out that I have some conflicts once again on my personal schedule. So I'm going to try to get that interview with the Meow team or the Meowcoin team out for you guys to kind of understand what's going on. But it is in testnet. You can test those hash rates. I highly recommend doing that, getting yourself in preparation for that. I need to do that on my end. We have a ton of GPUs I'm trying to get through testing here. It's just a lot of work. We had a really odd post from Joe Biden where he had laser eyes and said, just like we drew it up. What was that about? We're going to talk about that a little bit. And then we had Elizabeth Warren, signing a certificate in honor of Satoshi Nakamoto with a ceremonial flag flown over the White House. What is going on? This happened at the same time too. Very odd. We're seeing maybe in general, a government capture of cryptocurrency. And the fact is that that's something that, like, obviously we can't be completely delusional about when we're talking about cryptocurrency in general. We like to think, or I like to think, at least from the libertarian perspective, that we're going to see like some sort of power put into the hands of the people, but it is still at the end of the day a limited resource. And as we've seen with other limited resources, whether it be real estate or whatever, large corporations and governments seem to put those under their control pretty tightly. And is that a potential possibility with Bitcoin or cryptocurrency in general? Seeing that we have these issues with the power struggle and so on, it is possible, right? So I want to make sure that we are still like keeping an eye on that and thinking about those problems as we move into the future. It's not all about just mining and making money. A lot of this is supposed to be about how we're going to shift and make the world a better place. And if we aren't really considering all of the possibilities and all of the potentials for a downfall of cryptocurrency in general, then we need to take all of these things into consideration. And I think that that's really important. On the tech side of things, we have a really interesting release coming from Lee & Lee, which is going to be an L-shaped power supply. I think for small form factor builds, this is going to be really interesting, especially because the trend has been that we need larger power supplies, even in small form factor builds, and really kind of utilizing all of the space available and offering options to build these out in more, dense form factors is going to be something that we want to consider, even on the cryptocurrency side of things, when we're talking about maybe along the lines more of like AI generation, your vast AI rigs, your Core AI rigs, that sort of thing. And then we got a really good deal going on right now with RX 7900 XTs. They're $100 off for the refurbished models on Newegg. I'm going to tell you that now so you can go look if you're interested in picking some of those up. Obviously, great cards for gaming. I think some of the best bang for the buck at that price, and very, very competitive on the core intensive side of the algorithms for mining. But I would be amiss if I didn't bring up the fact that really on the AI side of things, where it seems like everything is moving, NVIDIA is way ahead of the game. So if we have AI integration into any of these proof of useful work concepts, you could put yourself in a very precarious situation being a heavy AMD leaning farm. But at the same time, AMD is offering like a lot of really good budget options for the mining side of things, especially with the RX 6000 series side. So these are all like pros and cons that we're going to have to weigh out. Do you leverage, or do you get that extra hash rate on for the lower price on the AMD side, but risk, not being able to participate in some proof of useful work options in the future? Or do you pay the premium on the NVIDIA side, considering the fact that really moving forward, NVIDIA GPUs are probably going to get more scarce again, and probably get more scarce quicker than we see AMD get. And maybe you do like some sort of shift where right now, while the NVIDIA GPUs are at least available, you're picking those up, and then you kind of shift into purchasing whatever's left over off of AMD. Of course, that will probably be the biggest strategy. So you got to keep in mind that the fact is if you decide to go with basically the most predictable strategy of every other GPU hoarder in existence, then you might be left in a position where you're just overpaying across that entire board. And maybe it's a better idea to be picking up the AMD GPUs while nobody's paying attention to them. Therefore, you already have those stacked before the prices on those start to go up. These are just some ideas I'm thinking about personally. Obviously, I think what I've been looking at has been really more niche products on the GPU mining side of things, like the BC250s, like the Intel A750s. The pricing on those is really just at the point where it makes a lot of sense. And so that's really where I've been stacking. We're going to be taking a look at that hash rate issue with Cedra and Caspa as well, of course. And then we'll take a look at some of the GPU profitability. I mean, for a while, Cedra was like pumping out on the GPU side until people figured out that they could throw ASICs on it, and then ASICs got thrown on it, and then bing, bang, boom, the Wicked Witch is dead, and GPU mining on Cedra was dead about as fast as it came up into fruition. I mean, this really goes to show that your biggest advantage with GPU mining is going to be speculative mining, cryptocurrencies that are not released on exchanges yet. That's where I've made a big bulk majority of the profits over the past 2 years since the Ethereum moved to proof of stake, since all of that. This is really where it's kind of what it's come down to, is being a lot more tight knit, being more closed lipped as well, unfortunately, is what comes along with that, and playing these strategies outright. And the thing with speculative mining, though, I will mention, is it's very difficult. You can have, 10 different bags of shit coins, and you're really maybe only going to hit a couple of them. And hopefully those couple that you hit are really going to make up for the rest of that power that you lost. And you're paying power out of pocket, and you're struggling. This is something that it's feast and famine right now. And it really is continuing to be feast and famine on that side of things. The ASIC side of things, more stable right now, even on the Bitcoin mining side. But keep in mind, we have that halving coming up too. I'm hearing a lot of rumblings of ASIC miners getting very nervous about this halving. Is the price going to go up further? And we really, in my humble opinion, we've already hit that price target that I was projecting for the move into the halving. The caveat there, I think that I want to make clear, though, is that we are seeing a huge influx of hash rate on the Bitcoin network coincide with this move into the halving. And that means that the price to mint, or the cost to mint a Bitcoin, is going up because the difficulty is going up. Not only is the difficulty going up, like we were talking in chat here right before the stream went live, everybody's power bill is going up, right? From 20% to, in some cases, it looked like some of y'all are getting 200% increases in electricity costs, and that is just going to naturally have to drive the prices up of Bitcoin. And the good news about that is that Bitcoin mining is an established enough industry that it will have that influence over the entire market. So as long as you really think that it's going to stick around, which in my opinion, it seems like it's going to stick around, then it should settle in at a reasonable place. The problem being, of course, is it is getting more and more consolidated into the hands of the few. And cryptocurrency was supposed to combat that. And it really is, it's very frustrating, because if you take a step back and you look at it completely objectively, the same problems we have throughout society in regards to economy and, separation of disparity between rich and poor and so on, it's just translating itself into ASICs even faster, right? At least with the GPU side of things, you have some consumer access to it. And I think really the reason I harp on this is I honestly, truly believe that the only way that we get to a point to where it is actually like revolutionary is if we get to the point to where we limit the greed factor and we unlimit the access to the individual. And that is just something that is very difficult to do, because no matter how we cut that pie, you can always cut that pie a little bit bigger for the people that have more money up front. And it makes it very difficult to like get out. In the early days of cryptocurrency, in the early days of any industry, there are a few that can rise to the top, right? You see it early enough, you get the Bill Gates, you see the social media early enough, you see the Zuckerberg, that sort of thing. And with the cryptocurrency, we'll see a few of those, but does it really end up at the end of the day all being consolidated to the few early investors that are at the top, stay at the top, and the rest of us just go back, working on the plantation? Right? At the end of the day, is that really what this comes down to? And it does feel like that sometimes. So a little bit of doom and gloom today, but I will say GPU mining is looking very good, especially on the speculative mining side of things. Reason being, why? You're in early, right? And that's really what, in my perspective, if I'm looking at it, got to be in early. You got to get in early. You got to do things that are more technically complicated that other people aren't willing to do. And you got to put in that work. This isn't any different than any other industry. You get all of the entrepreneurs that say the same damn thing and blah, 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 and you work hard and blah, blah. To a certain extent, it's true, right? But to a certain extent, there's a little bit of luck that's going to play into that. There's no way I'm going to be able to 100% of the time be like, this coin's going to be good, that coin's going to be good. I have a pretty good batting average, right? I would say I've done pretty well. I'm pretty happy with it, but it's not going to be that way every single time. And there's a little bit of luck that's just going to play into it. Let's go ahead and run the ad today, and then we'll get into the show. Today's sponsor is Build a Mine Bootcamp. I met Scott at the Crypto Mining Conference in Round Rock, Texas, where he assisted in helping put together that conference and visited one of his ASIC repair courses as well. I say all this to let you guys know that I am confident in my experience with Scott that he is the man to put this type of thing together successfully. In the Build a Mine Bootcamp, Scott will teach you how to avoid costly mistakes in building out your first megawatt of Bitcoin miners. You'll get a detailed roadmap and extensive planning checklists. You'll learn how to find the ideal site and get the best electricity rates. By the end of the bootcamp, Scott says you'll leave with spreadsheets, a working budget, and a design plan that you can take to your investors, contractors, team members, or whoever else you are working with to build your mine. Scott's goal is to help you do all this and get your mine built in less than 90 days. So take 30 seconds, go to www.build-a-mine.com/sun. I will have the link in the description below as well as the pinned comment. Then once you're there, click the I want to attend button and you will quickly be on your way toward mining 1 Bitcoin per month. All right, so let's hop into the first topic for today. Texas Blockchain Council and Riot Platforms sue the Department of Energy over the emergency survey. Now, if you guys remember last time on the show, we talked about this emergency survey where they were going out and surveying, Bitcoin miners for their power usage. And what has happened now is it is on pause. I don't think that this covers that in particular, but I did see just today before going live that the Department of Energy has put a halt on the emergency survey, and that is because of this particular suit. If the court does not intervene, the companies will be immediately and irreparably harmed, the filing says. The Texas Blockchain Council and Riot Platform sued the U.S. Department of Energy for demanding information without giving respondents sufficient notice. If the court does not intervene, the companies will be immediately and irreparably harmed, the filing said. The Texas Blockchain Council and Riot Platforms, one of the largest crypto miners in the state, sued the U.S. Department of Energy for illegally demanding information from many of the council's members, including Riot, according to a Thursday court filing. The TBC and Riot also sued Secretary of Energy Jennifer Granholm and the U.S. Energy Information Administration and the Office of Management and Budget and other officials. Of course, the Energy Information Administration was kind of spearheading this survey in particular, if you do recall. Quote, "This is a case about sloppy government process, contrived and self-inflicted urgency, and invasive government data collection." Of course, if you guys are not aware, this has been going on rampant across every single industry in the United States. As we look at it, everything's been put into these emergency filings, right? Everything from the, everything from vaccines to reports for energy, anything that they want control over gets tagged with this emergency, because unfortunately what we've done in the US is give a lot more leeway as long as people kind of mark it under these emergency tags. And I think that it's something that I wish we could like reverse and go back and say, hey, like, now, we can't just say that, if you tag it as an emergency that we have to abide by it. I mean, it's basically we've given up all of our freedoms at this point in lieu of basically just for safety, right? And it's getting to the point of being absolutely ridiculous. I'm glad that we're seeing a civil lawsuit here. The civil lawsuit says the EIA requested an emergency review and clearance from the OMB of a planned collection of proprietary energy information from the mining companies. The EIA determined that if such a collection were not authorized, public harm was reasonably likely. That's because the Bitcoin price's recent rally would incentivize more mining activity, leading to high electricity demand, just as a major cold snap hits parts of the country. Of course, as we were talking about in the beginning, they are increasing the cost across the board for, well, winter months. Here in Texas, everything's gotten warmer, though. Nothing's gotten colder. We really had our cold snap in January. That's already passed. And they filed this in February, on February 23rd. And really, it impacts, most of the mining is done in Texas. So it really impacts more the Texas companies. And there's no real emergency for a cold snap in Texas. So the whole thing's a farce as it is. Right? The EIA is demanding the information by February 23rd under the explicit threat of criminal fines and civil penalties. That doesn't follow the Paperwork Reduction Act's standard clearance process, which requires giving companies 60 days notice, the filing said. If the court does not intervene, the companies will be immediately and irreparably harmed by being forced to divulge confidential, sensitive, and proprietary information, the filing said. The EIA's actions represent an alarming precedent of government intrusion into private industry operations without just cause or proper process, end quote, TBC President Lee Bratcher said in a statement. Debates about the impact of mining on electricity are not new, and Texas legislatures have backed at least two bills signaling support for the industry. Starting to sound like Biden here. All right, so what the importance here, I think, if the takeaway is that this isn't anything new. There's nothing new under the sun as it pertains to, intrusion of the federal government into private businesses and individuals' lives, right? I always go back to really the early 90s when a lot of this came to light to the American public of this intrusiveness of the federal government. And they'll always bring up some reason, usually around safety, right? And in this case, they're saying that we could impact the grid negatively, completely ignoring the fact that if they look at this from the Texas perspective, we had a ton of curtailment that went through over this past winter that kept lights on, didn't cause more lights to go off, and reduced the cost of power across the board. In fact, Texas, as far as our electricity rates went, they seem to be very, very stable over the past few winter months. Now, maybe this impacts different states differently, and that is something that we should bring up. And in those particular cases, I think that that should be handled on a geographical specific basis. And that means that it should be at the state level that we're really looking at these things, and that individual state's impact of Bitcoin mining in that state, how those miners react with their particular sections and their geographical regions. And this shouldn't be a federal government intrusion, in my humble opinion. But that's the libertarian in me, I suppose. I'd like to hear your thoughts and opinions in the live chat as well as the comment section below. Suffice to say, at this point, everything's on hold. It does look like we'll get the due process. The 60 days will probably go through. And then, of course, we'll have the talks about the impact on the environment that will get thrown out once again. And then, of course, the laundering, blah, blah, blah. We'll get the fear driven into the individuals, and then we will see how it plays out. AI is really taking off, and it does have a pretty specific tie to cryptocurrency, not only from the perspective of the actual hardware that we utilize to power both of these technologies, whether it be cryptocurrency or AI, but also from the fact that we're starting to see a lot of integration between crypto and AI. And that's because blockchain does lend itself very well to AI in certain areas. The problem is that we're going to see is really this price of NVIDIA GPUs going up. And it will, though, coincide once again, because of the way economies work, we will see increase in the price of cryptocurrency. And that's really what this article here is talking about. AI-linked crypto tokens surge after NVIDIA sees a tipping point. AI tokens outperformed the CoinDesk 20 index as crypto traders bet on solid NVIDIA earnings and outlooks. Giant chip maker NVIDIA beat its already lofty four-quarter earnings expectations, boosting the broader equity markets in artificial intelligence-related tokens. NVIDIA said on Wednesday that its fourth quarter earnings per share were $5.16, beating the average analyst estimate of $4.59 per share, according to FactSet data. The chipmaker also posted revenue of $22.1 billion, which came in higher than Wall Street's expectation of $20.4 billion. AI tokens surged after NVIDIA's earnings. Singularity Net was up over 20%, while Fetch AI's is up over 10%, and Renders is up 8%. The overall market cap of AI tokens has surpassed $16.5 billion US dollars, according to CoinGecko data. In comparison, the CoinDesk 20, a benchmark for the biggest and the most liquid cryptocurrencies, is down 2.7%. Quote, accelerated computing and generative AI have hit the tipping point. Demand is surging worldwide across companies, industries, and nations, said the founder and CEO of NVIDIA, the leather vest dude. NVIDIA also forecast a first quarter revenue of $24 billion, beating analyst estimates of $22.2 billion. The beat comes as shares of the maker of chips that have fueled the artificial intelligence revolution surged more than 200% over the last year, taking the market cap of the company to nearly $1.7 trillion at one point, topping the value of tech giants Amazon and Google. The rally has been so hot that Goldman Sachs even called it the most important stock on planet Earth. The shares of the chipmaker rose more than 7% in post-market trading on Wednesday, while S&P 500 futures gained 0.5% and Bitcoin was down 1.2%. Of course, we are seeing that tick up on that side as well. This is continued as well. Just kind of reiterating, NVIDIA's hotly anticipated earnings trigger Bitcoin and crypto correction, analysts said. The most important stock on earth could disappoint on a weak PC market and AI saturation, with Wall Street wanting more from the GPU giant, pulling down crypto and equities, QCP Capital said. NVIDIA's fourth quarter earnings could trigger a broader correction for equities and crypto if it fails to live up to the hype. I personally don't see it failing to live up to the hype with everything going on right now. What do you guys think? Do you think it will? If it does, they're saying I think that it affects Bitcoin. I don't know that I necessarily agree with that either. AI AI-related tokens such as Ocean and FET, FET, may also trade off NVIDIA's earnings and outlook of the sector. The Bitcoin and broader crypto rally could come to a halt if NVIDIA's fourth quarter earnings fail to live up to the lofty Wall Street expectations, Singapore-based QCP Capital said in a recent note. Once again, most of these things, when people that are not in the cryptocurrency industry, specifically Bitcoin, when they start trying to speculate the, external influence on Bitcoin and the price of Bitcoin, I think that a lot of it ends up just being, frankly, FUD. And I don't necessarily like that term because I think it has a place. There's reasons to call into question, aspects of cryptocurrency, etc., and just labeling everything as FUD is not intelligent. But I'll tell you why I don't think that it really matters in this particular case. We've already seen that Bitcoin is very, very strongly tied to the cost to mint Bitcoin. We're moving into the halving. We've already started to see cryptocurrency adjust or Bitcoin in general adjust already for that halving. The anticipation is there. We'll probably see a big sell-off once again as miners prepare for the halving and they invest in new equipment, etc. And then we'll start to see the cost to mint really level back out. Once again, this is all energy based. Everything in life really is energy based, but really crypto is very, very energy based. And Bitcoin is too large, I think, at this point to fail. And yes, we can see individual miners within cryptocurrency fail, but as a whole, there's always going to be somebody mining and the market will always adjust. And because the demand only continues to go up for this particular asset, that means that it's going to stay in step with, of course, the increase in difficulty and the cost to mint. So I don't think that in particular, this will have a bearing on the price of Bitcoin. However, I will say this, we still have that last dip that hasn't necessarily taken place yet that usually is caused by miners right before halving to invest in more hardware to make up for the reduction of Bitcoin that they'll be receiving from the base block reward. And that could coincidentally line up with this particular theory. And then everybody on the outside will say, well, it was because of this. When in fact, I don't think it will actually be because of this, but that's all to our advantage in general as miners. We already know what's going to affect this market, and we can just let the plebs assume that this is the reason why and be misinformed as ever. Quote, a key event today that could trigger a wider correction is NVIDIA earnings, which will be released after the U.S. close, QCP wrote in a note. As major part of the S&P 500 index, NVIDIA's performance could set the tone for U.S. equities in the near term. NVIDIA, the GPU giant that designs chips necessary for the AI revolution, is set to report its earnings on Wednesday after the market closes in the U.S. The chip maker's stock is up nearly 220% over the last year. The market will be sharply focusing on the potential for the stock to sustain the face-melting rally. In fact, the rally has been so hot that Goldman Sachs even called it, quote, the most important stock on planet Earth, blah, blah, blah. We already know that. So with such a high valuation, the margin of error is very slim. At these valuation multiples and high expectations on earnings, any disappointment could see a sell-off. That would certainly put a drag on U.S. equities and crypto prices as well, QCP continued. Another crypto subsector that could see volatile trading session from NVIDIA's earnings is the AI-related tokens such as Ocean's Protocol, Fetch AI, of course, anything related to this, Vast AI, Clore AI, so on. This is another perception problem, okay? I want to bring into focus the fact that crypto-related AI, at least the ones that are functioning from a proof of work perspective, are not actually being influenced by AI in general, except for people that are purchasing them that don't really understand what they're actually doing. Case in point would be both Vast AI and Clore AI, where even a lot of GPU miners don't actually know what the fuck they're doing in the first place. They put it up on there. They think they're doing some sort of AI work when in fact, most of the time they're mining shit coins. And this is most evident in the previous spark up of the Gram token on the TON network, in which case there was a period of time where mining Gram was so incredibly profitable that people were paying a lot of money on both Vast AI and Chlor AI to essentially basically mine Gram and turn a profit. It was just mining arbitrage. As you guys know, this is something that I've been doing for a while, and I've been talking about it over on sonofatech.locals whenever I find these mining arbitrage opportunities. But the fact of the matter is the price increase in Chlor recently is more likely due to the profitability of Gram than it is to do with anything in the AI sector. So the only thing that really affects the AI sector in crypto is outside interest. So people that don't actually understand what's going on under the hood of most of these AI projects. And it's something, once again, that luckily you and I will understand, but the retail investors won't. And this is just, once again, I talked about this frustration in the beginning of like token go up, but why? No one really knows. They put AI on the end of everything and people go, oh, well, it's AI. That's the hot new thing. I'll just buy it. And then price goes up because a bunch of people buy it. Devs dump on your ass, and then you're just fucking over. And that's probably going to be 99% of AI stocks and AI integrated cryptos, right? Is going to be this kind of, once again, just like the NFT stuff, we saw pump and dumps of DeFi, NFT. It's just going to translate into AI tokens. And so it's going to be a very tricky thing to navigate and understand what things are actually being utilized for. A great way to do this, if you really want to get into it, and what I've done, and I think helps a lot, and how I caught Gram and in general, how I've caught like some of these Able coin, for example, as well. The way that people are catching these are creating basically honeypots on these platforms like Chlor as well as on Vast. So you create a Vast AI rig or a Chlor AI rig, you throw it up and you wait for someone to rent it. As soon as they rent it, you can usually see the command line, and then you can reasonably search GitHub and other stuff to figure out what they're actually doing. And then you can see where the real profitability is. This is a strategy that's worked out very well for me. It's an idea that I'll share with you guys here. Also, if you're just wanting to go off of what I find, you can go subscribe to Locals at sonofatech.locals.com, and I'll make it easy for you. I'll tell you how I do it, but if you want it to be easier, you can go to Locals. That's it. And I appreciate the support over there from everybody that's been over there. Let's talk about Bitcoin miner Marathon to start a slipstream to make complex Bitcoin transactions faster. Marathon will be the first publicly traded miner to offer such a service by utilizing its own mining pool. Slipstream will help expedite the processing of non-standard Bitcoin transactions. Marathon will be the first publicly traded miner to offer such a service by utilizing its own mining pool. Bitcoin miner Marathon Digital to roll out Slipstream, a new offering that will help expedite the processing of complex transactions. Slipstream will make the confirmation of large or non-standard Bitcoin transactions easier, cutting out the delay and complication users often face during such a process, the company said in a press release. If a complex transaction meets Marathon's minimum fee threshold and conforms to the network's consensus rules, the miner will add the transaction to the members' pools or mempool for mining, the miner said. Mempools are essentially waiting rooms for Bitcoin transactions. Quote, by default, Bitcoin nodes frequently exclude large and non-standard transactions from Bitcoin's mempool, even if these transactions adhere to the Bitcoin network's consensus rules, said Marathon. As a result, complex Bitcoin transactions are often delayed or unprocessed. To encourage experimentation and development on Bitcoin and to enable and expedite the processing of larger complex transactions that comply with Bitcoin's protocol, Marathon has launched Slipstream. Marathon will be the first publicly traded mining company to offer such a product and able to do so, given that its own mining pool, Marapool, owns it. Because it is the only publicly traded Bitcoin mining company that operates its own mining pool, Marathon is also the only known publicly traded Bitcoin miner currently capable of offering such services, the company said. As Marathon can operate as the sole miner in its own mining pool, the company says it's able to customize its pool settings to accept more diverse transactions. However, such customization brings the question of censoring users' transactions. The topic has been hotly debated recently as some mining pools have been accused of censoring. Marathon said that transactions submitted through Slipstream will be subject to certain terms of service, which prohibit unauthorized copyrighted material and objectionable material. Now, this is obviously something that we've been talking about in cryptocurrency for a while, especially as it pertains to the Bitcoin network and this censorship and the control that large miners have. It's case in point of kind of the toxicity that large ASIC miners have on the principles of cryptocurrency and what we're able to do. There shouldn't be any censorship at all, and this is a form of censorship. And frankly, this definitely, hurts my faith in crypto in general when these types of things are taking place. I'd like to hear your thoughts and opinions, though, in the live chat as well as the comment section below. Marathon is uniquely capable of offering these services because of our scale, our mining pool, and our team's technological expertise. We believe Slipstream is mutually beneficial for the industry and for our organization, said Fred Thiel, Marathon's chairman and CEO. The miner's been actively experimenting on its mining pool, which hasn't always gone smooth. Last year, Marathon mined an invalid block due to an unexpected bug, which raised some questions among the community members as to the security of the network. However, the event was cited by Marathon as an example of the resilience of the Bitcoin network. What do you guys think about this in general? And like someone the size of Marathon basically being able to solo mine Bitcoin. And how are we going to get people moving over to I think it's like the Ocean Protocol, or am I getting that mixed up now, where we have decentralized mining pools? And if these types of things are capable, right? Like large miners are capable of mining their own transactions and censoring transactions, and they have no incentive to decentralize the mining pool side of things. Will that ever be something that comes into fruition? We had the peer-to-peer experiment, peer-to-peer mining pool experiments on Bitcoin. It never really took off because I think the mining pool industry is too lucrative for people to actually want to move over. If they're a large enough miner, they build their own pools, and then they get the kickback of, whoever else decides to mine on that pool with them. It's definitely a problem. And I don't know how to solve it. These are just problems I see. And so, I'm sure there's a lot of smart people that are going to hopefully get these things figured out. But I don't like this particular proposal from Marathon. Now, we have, everybody's been asking about Cedra. And Cedra is a new fork of Caspa. And obviously I am very bullish on Caspa from a block DAG perspective, from the move to basically blocks per second focus over transactions per second, a very unique way in solving, speed of the blockchain, speed of transactions. I think that it's very innovative, and it would be expected that with its current success that there would be lots of forks. We're having forks that are promising ASIC resistance, with none of them coming into fruition yet. Carlson being the closest in testnet with Fishhash. We've seen a lot of different forks, but this one in particular is still utilizing K-heavy hash, which has, brought up some interesting turn of events as it became more profitable than Caspa for a brief time, and a lot of miners moved over to it, causing a drop in hash rate, and therefore, of course, a coinciding drop in security on the Caspa network. And the question, though, I think that a lot of people are going to have for me is what do you think of this project? And really, I only have to go to the front page here and look at economics to give you guys my personal opinion on it. And as I read through it, I think 99% of you will know what I think about it, and I won't have to say jack shit. So it is proof of work and on block DAG. The algorithm is K-heavy hash. which is going to be mineable with the K heavy hash ASICs. Obviously, we have a new ASIC coming out here that we're going to talk about right after this. It has the token ticker. It's got the block time of 1 second and a total supply of 28.7 billion SDR. Here's where things get interesting and questionable. Allocations, pre-mined, 20%. A strategic blend offering 10% early mining rewards, 4% early supporters and enthusiasts, and 6% liquidity pools and exchanges. Enhances liquidity on exchanges and pools, balancing supply and demand. Artificial manipulation, basically, of supply and demand is what you're seeing here, which is probably why it became more profitable than Caspa in the first place. Not because of the merits of the project itself, but because of artificially influenced economics. And we see this a lot in cryptocurrency. And almost every single time I've seen it, it's turned out bad. It just does. Okay? Ecosystem, 30%, marketing, 20%, development incentives, 10%, treasury, 10%. And here's another problem that I have. Staking and farming operation, 10%. Now, unpopular opinion from somebody that's been through this a million times, hybrid cryptocurrencies is the fastest way to lose all your money. It just is. Now, I get it. There have been a ton of successful ones recently, and you got your friend Andy pumping the shit out of them, right? From Neoxa to whatever the X11 ones were, and basically a lot of people that are trying to get in early. You're seeing these kind of early miners hop in, suck up a bunch of them, and then build the nodes with them. Problem is, this started a long time ago. This isn't new, okay? This started a long time ago. Hybrid models have been around for a very long time. Obviously, most famously would be Dash, which has really been one of the only successful, if not the only successful one over multiple runs, has been Dash, right? Where you have a hybrid model. And a majority of them, one in particular that I participated in as well, which is why I know that this usually turns out bad, was Pearl. Pearl was one of the very first ones. It was ET hash based. It was a hybrid ET hash based thing, collapsed, right? The fact of the matter is 99% of, in my humble opinion, 99% of them will fail at some point because there's too much of an incentive to sell off for profitability and hinder the security and resiliency of the network than there is the incentive to keep everything staked, okay? So when we look at this, a brand new coin that comes out that one is on K heavy hash and is just a fork, two has a bunch of pre-mined bullshit in it to artificially manipulate the supply to make the price go up, and then adding in a hybrid proof of work, proof of stake operation, it doesn't sound good to me. Now you could say, oh, I made a ton of money off of it. Okay, fine. Okay, fine. I'm glad you made a lot of money off of it. Doesn't mean that everyone will, right? Somebody is always left holding this bag. So don't get left holding the bag, is all I'm going to say. This is just red flag after red flag after fucking red flag. And there's probably going to be like 100 different crypto influencers that are going to influence you to mine it, stake it, and then they'll go in, they'll undo their stake. They'll show you how much money they're making. They'll undo their stake, dump all that shit on you, and you'll be stuck there with a sub-penny fucking bullshit cryptocurrency that the devs abandoned 5 years from now or whatever it may be. That's the potential with these types of things. And they tell you right off the bat what's wrong with them, guys. They tell you what's wrong with them. This is all right here. These are the red flags that we point out every single time. So if you expect me to hop in and just give away and give up on all my principles and tell you, no, this is fine so I can make money, it's not going to happen on this fucking channel. Sorry. I stood by these for a while. There's reasons I stand by these things being red flags. And I tell you them. Could you make a lot of money off of it? Sure. I hope you do. Am I going to tell you it's a good idea? No, because I've seen most of the time it turns out being a bad idea. It just does. All right, let's talk about Bitmain and the new KS5 coming out. We got KS5 Pro and the KS5 spot sale coming out. It's 1,500 per terahash. So these units are going to be, let's just pop this open. We'll just pop this open right here, make it easy, right? So the KS5 21 times 1499, plus you'll have all your duties and all that, but 31,000 for the KS5 Pro. Take 1,500 off, 30,000 or just under 30,000 for the KS5. So obviously a hefty upfront cost. Really, you know, I mean, it's been like this for a while, but Caspa is not the cryptocurrency of the people. I mean, it's pretty clear that Caspa is the cryptocurrency of people that already have money. And that's really, frankly, what it is. It will always be that because it's ASICs. And that is really the problem with ASICs from the very get-go. There's not a consumer grade option for individuals to really capitalize off of. And sure, you could say, well, there was the KSO and the KS Pro, but that had a very limited lifespan on you to be able to actually capitalize on that. This is really why I don't like ASICs. And the reason I don't like ASICs is because what I do is teach people how to go from being a regular IT guy, you know, making $60,000 to $100,000 a year and build up assets that allow him to escape that 9 to 5. That's what I've always been here for. I can't tell you to go spend half of your fucking income on an ASICs that mines one large top 10 cryptocurrency in good conscience. It's just, it doesn't make sense. It's so much money. And it's not something that's attainable for most individuals. It just isn't. It's attainable for the people that are like large cryptocurrency YouTubers that get the equipment for free to convince you to spend the money on it, right? But then you're completely beholden to that particular algorithm as well. And let's say you bought the KS1 and all of these launch and come on, you only have a certain amount of time for ROI before they become bricks. This has been the problem with ASICs from the very get-go. It's insane, dude. But they already got them here listed on hashrate.no. Look at this, 6,666 mega hash a second. Inefficiency. Mega hash per second per watt. That's kind of funny. All right. So obviously they're going to make a ton of money on Cedra right now, $244 in revenue a day. Keep in mind, this will probably change. Right now, the reason why that'll be extremely profitable is people are trying to build up and get ready for the staking. It's typically what happens with these types of projects. Like I said, we saw it on the Dash forks. We'll probably see it here as well. It's just kind of the way it goes, right? The price is kind of, with the staking cryptocurrencies, just like to give you guys an idea, the hybrid models, they usually release the staking a little bit afterwards. So the price gets inflated in the beginning from everybody trying to get ready for the staking. And then once everybody's staked, the price comes back down, right? So you'll probably see that a little bit with Cedra. I don't know how pronounced it'll be, but it's something to take into consideration. This does mean I think your ROI would be pretty insane. So that's 12 cents. So if we do at 12 cents a kilowatt hour, KS5 Pro, or this is the KS5, so we'll do minus 14.99 divided by 243, something like that. I mean, yeah, you have a 120-day ROI on Cedra, and then you have 130-day ROI on Caspa. So if we compare that to the KS3 right now, what was let's see. The reason you would want to, so it's about a third. That. So you probably see the adjustment of that down to whatever this ROI would be. Well, it would be the same, right? So it really would be, I mean, just playing with it, right? If we did $14.99 times 20 divided by 80, I mean, I would assume we would be more looking at probably this, probably like a year ROI once it launches, something like that. Of course, price of Caspa could continue to skyrocket. It's already performed very, very well. Cedra, I wouldn't bet on in general, but you still have Caspa probably sitting pretty hefty as far as that goes. But, you know, I don't expect a lot of people that are getting into mining right now, you know, going to be able to purchase a $30,000 miner, right? It's pretty exclusive to the larger miners that are going to be investing in this, to the larger cryptocurrency YouTubers that are going to invest in this, that sort of thing. So from that perspective, I'm not really going to cover a lot of it. I think that it's ridiculous to invest $30,000 into something that has that much risk tied to it. I don't think it's a smart move, right? Because you're really like that. Like if you're the biggest Caspa fanboy and you believe that it's, you know, you believe in Caspa no matter what, I mean, I get it. You're going to buy it. You're going to mine. Hopefully it'll be successful for you. It's proven to be successful in the past for a lot of people on the KS1s, the KS2s, and the KS3s. There's potential for it to continue to be successful in the future. But if you took a step back and you're not a fanboy of Caspa and you look at it objectively, I think it would be ill-informed to suggest making a $30,000 investment on something that is so tied to a single algorithm. My opinion. Anyways. Talk about Factorn, because Fact is really blown up here recently. I have covered it on this channel and how to mine it in the past. And a lot of people are kind of curious about how it functions. The reason it's kind of blowing up is because obviously more people are finding out about it, but factoring is really kind of an innovation. So I'm always looking for things that are innovative, right? So for Caspa, when I saw it, obviously, shifting the focus from transactions per second to blocks per second and the block tag, right? Super innovative. That's why I was interested in Caspa. The reason I'm interested in Factorn is because factoring is a completely different approach to validating blocks on the chain, right? So factoring is a fundamental concept acquired in primary school, involves the decomposition of numbers into prime factors. While the basic understanding of factoring is instilled early on, its complexity escalates with the size of numbers. Various algorithms, each exhibiting efficacy within specific integer ranges, have been devised for this purpose. The foremost algorithm for handling large numbers is the general numbers field sieve, NFS, followed closely by the elliptical curve method, ECM. While ECM's acronym signifies something else for our current context, this explanation suffices. Factoring large numbers is an arduous task, serving a crucial role in safeguarding critical systems such as those employed by banks and government websites. The RSA cryptographic system, for instance, heavily relies on the formidable challenge posed by factoring for its security. Interestingly, there exists a community of enthusiasts who derive enjoyment from factoring as a hobby, engaging in projects aimed at discovering prime numbers for factoring numbers with distinctive patterns. These individuals contribute to a collective exploration of mathematical intricacies. Notably, the RSA Factoring Challenge gained prominence as a notable event, enticing participants with cash prizes for successfully factoring specific numbers. Originating from RSA Labs, a company still in existence, it made headlines when Dell sold it in 2020 for a staggering $2.1 billion. In the contemporary landscape, the Factoring blockchain emerges as a modern iteration of the RSA Challenge. Enabling widespread participation in factoring, it offers the potential for participants to earn coins through their factoring endeavors. And this really is actually something that is unique to factoring, and why when it hit my radar earlier this year, I got into actually doing a little bit of it on the CPU. Unfortunately, the difficulty got so high so quickly that I was only really able to get a few factorn before, or a few fact tokens before it kind of, you needed really like basically enterprise grade CPUs to really compete on the network, especially considering that there's no pooling currently available. Now, there have been some changes, and this will probably all change here in the near future. So it's something I'm keeping an eye on. Once we get to the point to where I think an individual at a lower level with either GPUs or more consumer grade CPUs are once again able to compete with this, maybe at a pool level or whatever it may be, then we'll get back into it. If you're interested, links are down in the description below, but this is one I'm very interested in, once again, because it's unique, it's innovative, and it does something different than everything else that's currently available, and why I'm interested in it. So I want to give you guys an idea. This is definitely a very, very unique approach to blockchain, and I think could help also from a decentralization perspective, provided we kind of see what happens on the pooling side of things. Obviously, is there potential for ASICs from a factoring perspective? Probably, at least FPGAs, I would assume. If they're going to try to change that, we'll have to see. It'll be definitely difficult, but once networks are more, popular, which it is gaining popularity, there is possibility of that stuff coming down the line. Now, a quick note, we already went into this in depth. You can check out the previous episode for that. The Meow Pow launch is in 22 days, 22 hours, and basically flat, right? So we're about to click down to 21 hours and 59 minutes. Keep an eye on this. I think, I like seeing new mining algorithms. So that is why I'm interested in it. I'm still not sold on Meowcoin, right? I mean, to me, the purpose of just like devs donating to blah, blah, blah for, cool. I don't get it, to be honest. I'm on the fence. Like, it's like, okay, cool. I like seeing the new algorithm, right? But from a perspective of like a blockchain, I'm kind of like, I don't really understand. I don't get it. It's not that I dislike cats or anything. It's just like, okay, you could do this with a token, right? Or a different blockchain. I don't know. Do you guys see it? Am I missing something? Am I missing something, bro? Maybe I'm missing something. All right. This is a weird one. I'm just going to show it to you guys, and then I want you to tell me what the hell's going on. What is this? Joe Biden on his official account, not on the POTUS account. They tweeted out laser eyes, which is typically related to Bitcoin, and then said, just like we drew it up, period. Is he trying to get votes from the crypto industry while simultaneously trying to destroy it? I mean, I guess that would make sense. That's what every politician tries to do. Destroy the workers, take advantage of them, and pretend that they're going to do something good for you, huh? I don't know. This is weird. I don't know. Anyways. Another weird one, but we do have some clarification on this. Elizabeth Warren signed a certificate in honor of Satoshi Nakamoto with a ceremonial flag. Said, quote, for the 15th anniversary of Bitcoin, the first truly inclusive financial system that is providing new economic freedoms to populations previously ignored by both public and private institutions. Americans are forever grateful. These were kind of coinciding, right? Oop. So I thought that was weird. But I did want to point out that anybody can basically do this. So you can get an American flag that's flown over the U.S. Capitol, so it's not really that big of a deal. So you can get one of the special flags, contact your congressman or senator, and they will send you a flag your way for $30. Anyone can purchase a flag that has flown over the U.S. Capitol, blah, blah, blah. So I guess in theory, anybody could do this. So maybe not that unique of something. I don't know. Still weird. And then coinciding with that, Senator Elizabeth Warren and Sherrod Brown trying to kill the entire crypto industry, Chamber of Digital Commerce. U.S. Senators Elizabeth Warren and Sherrod Brown are trying to kill the entire crypto industry, according to the Chamber of Digital Commerce. U.S.-based crypto advocacy group argues that the lawmakers are spearheading an unprecedented attack on digital assets, citing Warren's Digital Asset Anti-Money Laundering Act. The bill, which Warren first introduced in 2022 and then again last July, aims to make the crypto industry comply with the same money laundering rules that apply to the traditional financial system. It would, among other things, extend Bank Secrecy Act, the BSA, responsibilities including know your customer requirements to crypto wallet providers, miners, validators, and other network participants. In July, the potential legislation was referred to the Senate Committee on Banking, Housing, and Urban Affairs, which Brown, Ohio, chairs. This week, Boring, the founder and chief executive of the Chamber of Digital Commerce, penned a letter to Brown urging the lawmaker to kill the bill. The CEO argues that the potential legislation poses a clear and present danger to both national security and the economy. This bill, if passed, will erase hundreds of billions of dollars in value for the U.S. startups and decimate the savings of countless Americans invested in the asset class legally. Furthermore, this bill will ensure we cede any remaining leadership position in the digital economy to China, or concede, I guess he means, Russia, North Korea, and Iran, which is something I've been talking about for quite some time, who are eagerly awaiting to take advantage of the perceived willingness to abdicate such responsibility. Boring likens the bill's regulations to requiring an ink manufacturer to track every individual who handles any single dollar bill printed with their ink. Just as tracking every dollar bill user would be untenable for an ink manufacturer, imposing similar demands on blockchain entities like digital asset miners and validators sorry, I had to cough, is equally unfeasible and detrimental to innovation. Here's the thing though, like, because this is like the title of the video today, right? I don't think it's even possible for them to implement this, because this would have to be an international thing, one, which means that countries that do not agree with the US would have to participate in it, right? And two, they don't really understand how it works in the first place. It's akin to like basically trying to track the internet and regulate the internet. And while to a certain extent it has been done, it's still like nothing was able to actually stop the internet, right? Like the innovation just keeps coming, and it keeps coming so fast in this digital age that I don't think it's possible for them to actually put or implement this type of thing. I mean, what do you guys think? Like, do you think like it's possible to basically do this? I mean, obviously where I think it should be all focused is inlets and outlets, right? So what do I mean by that? The inlet into the cryptocurrency space from fiat. I've always said this. it makes sense that you would regulate any inlets like exchanges from a fiat currency into cryptocurrency and any outlets from cryptocurrency into fiat. Outside of that, I don't think the country should have any jurisdiction over cryptocurrency itself. I also think it's a waste of time and money to even attempt to do so. But, you know, our government's really good at wasting money and then filtering it back to their own pockets. So whatever. The Treasury Department is making clear that we need new laws to crack down on crypto's use and enabling terrorist groups, rogue nations, drug lords, ransomware gangs, and fraudsters to launder billions in stolen funds, evade sanctions, fund illegal weapons programs, and profit from devastating cyber attacks. So there's the FUD, as you may say. All right. So here's a really interesting one. Lee & Lee shows off an L-shaped 1300 watt power supply for dual chamber cases. Dual chamber cases have been more popular more recently. It allows you to basically keep the power supply and the cabling and everything separate from your main components. I've utilized quite a lot of them. I like the design. This is going to make things, I think, a little bit better from a cable management perspective, but also could have some interesting applications from crypto mining, the GPU mining rig perspective. I don't think it necessarily has enough plugs potentially. Well, it does, right? So we got, no, it doesn't. You probably use these in like vast AI rigs, right? These are all USB motherboard signal, and then give me a top down. Is there a better one? There we go. I don't see any PCI Express. Oh, there's one right there. Got it. Okay. .5 connector right there. Looks like 850, 1000 watt, and 1300 watt availability. I thought these were cool, so I just want to show you guys. From a pricing or deal perspective, Newegg is selling some refurbished 7900 XTs at $100 less, $649. Might be something you want to take a look at. I mean, if we go to GPUs, 7900 XTX, I mean, they're still doing really good on a lithium. Any of the core intensive algorithms obviously doing good on. So that might be something you want to take a look at. It looks like, I mean, obviously the ROI is still going to be ridiculous on any of these. We've been talking about that for a while, you know, at 12 cents a kilowatt hour. Oh, we already had a calculator up. There we go. 12 cents a kilowatt hour, 0.47 or whatever, or yeah, here, hold on. What is it? 649. That's right. It's going to be like a ton of days. This is something though that's interesting. Like ROI right now is it really is the time to buy. I mean, 1380 days, right? Nobody's buying any equipment because the ROI is so crazy. But once the ROI starts hitting 200 days on any GPU, it's going to be too late to buy them, right? So, I mean, I wish ASICs had that potential. I mean, the Bitcoin ASICs to a certain extent do, right? Or they did this last time because we had a lot of miners go under. So you had that potential from the ASIC side of things. But on an individual algorithm perspective, you don't really have that option, right? So I don't know. Take it for what you will. But this was interesting. We're seeing hash rate drop on Caspa. The only reason I bring this up is that this was an early reason for Caspa to move to ASICs, was that the hash rate would be more stable than it would be on GPUs. Of course, I replied with, until there are forks of Caspa and there's a more profitable K heavy hash coin, then that wouldn't be true, to which I was called dumb and stupid. So I just wanted to say a big old fuck you, because that's exactly what happened. I told you it can happen. I don't know why you guys don't listen to me. Anyways, let's get into questions and comments. Remember, super chats are never required, always appreciated. First to be answered because they're the easiest to read. Tagging @SimonTech will highlight the message orange, and I'll be able to read it easier. There we go. Boom. Pop that baby right out. Thanks everybody for being here. I know it's a Saturday. Everybody's busy. I get it. Tony says, at Simon, what is your opinion in Ravencoin on the bull market? I just don't know. Like, Ravencoin's performance last bull run wasn't necessarily great either. So, I mean, if we say history rhymes, then I would say that I wouldn't expect it to be like mind-blowing. I think it'll follow the rise in Bitcoin, and it'll be a profitable GPU mining option as it's always been. But I don't think it'll be the one that everybody's mining, right? Latrell says, outside my deck, did you catch the BitBoy fight last night? No, I don't watch white belts fight. Why would I do that? Why would I do that, dude? K-Cut says, outside my deck, 6 gigabyte A2000s at 160 a piece, or HP OEM dual fan 3060 Ti's at 225 a piece. Which should I buy? And what do you think? Well, I mean, so the A2000s are 6 gigabytes. So I think depending on the 3060 Ti, you're going to get more VRAM, which I think is going to be better. More VRAM is something I've been talking about. From a resale perspective, you're probably going to be better off reselling 3060 Ti's than A2000s. But there is the A2000s do sound like they're priced pretty well. Keeping in mind that you will probably need to, if they're not already modified, you will need to modify them for the higher hash rates. But then once you modify them, their resale value goes down. So I would probably do the 3060 Ti's personally. We got a super chat from Are You Trying It Out? $2 says, what do you think about Neoxa? I don't like hybrid coins, and I don't understand how they're getting away with licensing on video games. So that's what I think about Neoxa. Ted says, outside of the tech, it's reported one of his staffers that did it was reprimanded for it, and that's why my buddy said that they have some contacts on Capitol Hill. Why is it left up then, Ted? That doesn't make any sense. He's referring to the Biden laser eyes. If they were reprimanded, then you would assume the post would be taken down, which is not the case. The post is still live. Jock says, outside of tech, your favorite Sesame Street character? Big Bird. 7 Hughes says, outside of tech, I understand the greed and dirtiness from the manufacturers. Remember DCs require sticky pads because of the dirtiness of the person. Same followers with the person's company. I don't know what you're referring to. It's hard to, maybe I'm missing it. Thanks for the comment though. Grant says, outside of tech, do you think holding any of these Caspa fork coins is a bad idea? Like Pyron, for example, mined Ergo for a year with a poor choice. Not sure what to put 3070s at. Well, the thing is any fork, the best time to mine a fork is when it's not listed. And the best time to sell a fork is the day it's listed. That's my strategy, right? What are you doing? You're adding liquidity to a coin that people want to buy. It's not really a problem for me from a principled standpoint, but also why would I hold something that doesn't do anything original? I'm not interested in holding anything that isn't ground up. Like I'll hold Caspa, I'll hold Fact, I'll hold Bitcoin, that sort of thing. Anything that's like a fork and tries to innovate, like it's got to prove itself, right? So that's how I feel about most of the forks, just personally. So the best time to mine a fork is when it's not listed on an exchange, and the best time to sell a fork is the day it's listed on an exchange. Scott A says, at Sonotech, Intel A770 or 580. The A750 is the best, actually. You missed the best one. But I would do the A770 over the 580. Savage says, that's Sonotech. Michael Saylor brought up a good point I hadn't considered. He wouldn't support making the transactions cheaper since it would be breaking the pay contract with miners. Your thoughts? Are you talking about like in relation to what Marathon Digital is doing? I don't think that there is any reason that what Marathon Digital is doing should be accepted and allowed. But that's my thought. Ted says nothing comes from Capitol Hill makes any sense. No, I mean it's a very odd time we're living in, my friends. Mind Something says great stream today. Your perspective is always enjoyed. Thanks, Mind Something. Yours as well. Make sure you guys go sub to Mind Something on YouTube here as well. Cody says my Radiant bag is almost 1 million. Need more. Only 2K bag of ALF also. Well, 2K bag of ALF is probably pretty good. I'm going to get out of ALF now because of ASICs. So that's just the way I feel. You know, I'm tired of I'm tired of just being like my cryptocurrencies getting taken over by large ASIC manufacturers and being manipulated. It annoys the piss out of me. It just does. But that's how I feel about it. With a move to a 4.5 gigabyte DAG and the elimination of RX 584 gigabyte farms, will Meowcoin see increased yield in the first few days after the shift to MeowPow? It's going to be, I mean, I think you'll see an increased yield. Yeah, but I think it'll all balance out, right? Because that's going to balance out the coin price on the exchange as well. It all comes into balance no matter what, right? Like, I don't think you're going to make a killing off Meowcoin except for maybe like a little bit of time right after. But then once you start adding that volume to sell, it's going to come down. And as miners see that it's profit, it's the same problem we always have. That's why I'll go back to this. The best time to mine a fork, and this is actually true with anything, right? The best time to mine is when it's not listed. The best time to sell is the day it's listed, right? If you can be the first one to sell too, you can get like crazy gains, right? But that's the idea right now behind most of this. Max Hash says, which one would you mine between the new Caspa fork, Pyron, Carlson, or Nexeli? I would mine. I mined none of. I showed people how to mine Pyron and Carlson. I mined Pyron and Carlson before it was listed. As soon as it was listed, I sold it. Nexeli I didn't touch because I'm mining something else that was built from ground up that's better. And they're all none of them are ASIC resistant yet. Carlson would maybe be. I'll consider mining it once it is. And they're all forks. So, none of them. Right now, I would mine none of them. I would rather turn my rigs off than mine any of them. Just being honest here, bro. I guess if I had to pick, I'd say Carlson. Because at least they're going ASIC resistant. Slow Ski says, Ask of Attack, Meow seems interesting to me. Do we really need more than charity and memes? I think you do. I don't know. I just don't see the point. But I'm sure a bunch of stupid people are stupid people. The buy it price go up and they'll say, oh, you were wrong. And I'll be like, all right, cool. Whatever. It doesn't, like, it's cool. But I just don't see the point. I just don't see the point. I don't. Next Twitch stream, I don't know, dude. I don't know. Oh, end game of crypto, in your opinion? Been in the game 4 years and getting bored. There's nothing to be bored about. I mean, end game of crypto is very simple. I mean, we're going to see a collapse of all fiat. Countries are going to continue to print money until it's worthless, and everybody will default to crypto, just like everybody defaulted to the internet. Right? I mean, like, crypto is just inevitable. We don't know if it's going to be, here's what I'll give you, right? It's either going to be state-controlled, central bank digital currencies, or it will be not state-controlled, cryptocurrencies as we have them right now, just more developed. One of those two things is happening, whether you like it or not, right? That's the end game. The end game for us is to choose to opt out of CBDCs, right? It's like why I go back to like, it's like the title, right? It's too late to stop crypto. Like you're not going to regulate Bitcoin out of existence. You're not going to regulate cryptocurrency out of existence. You're just going to create something that's more competitive or more convenient, right? Tinfoil hat, which I actually have. This is legitimately a tinfoil hat. So I'm going to throw it on for you guys. We'll throw it backwards. But tinfoil hat here, we really want to get into it. We really, 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 really want to get into it. How do you prevent people from opting out of central bank digital currencies? You make them so fucking poor, and then you give it to them. And then they can only spend that because you gave it to them. See what I'm saying? You make the population so poor that they're reliant on you. You give them money, keeping them reliant on you, and you force them to use your currency and they have no way to opt out. And then that's how we end up with central bank digital currencies and no other options. And if you look at what's happening across the world right now, it seems to be happening. That would be my strategy. Just saying. That would be my strategy if I was trying to control the population. You make people just poor enough to where they'll fight for you, but not so poor that they fight you. Thanks for watching, everybody. Be sure to hit the like, comment, subscribe, and notification bells down below. I will see you next Tuesday. Don't forget to check out sonofatech.com for my crypto mining e-course, which covers the Bitcoin halving cycle in detail and supports the channel directly, so I don't have to slam down a bunch of cryptocurrency advertisers for you or compromise my opinions by accepting cryptocurrency hardware that I don't believe is a good idea for you. And go check me out at sonofatech.locals.com, where I have a bunch of written articles and guides on how to mine a bunch of stuff that's not available on exchanges yet. Peace.